Good evening everyone and welcome to Admiral Market Session Recap of 26th of May 2014. Today I will show you setups on Euro, Dollar, Cable, Aussie, Dollar, Yen and GBP Swissy. So today before we begin I have some questions concerning Sunday webinar. I think it won't be uploaded because it was a premium webinar. But if you want to see premium webinar again, I think you should contact Admiral Market Support and ask for video recording. So I don't know if it will be available for public. Maybe it will be available for public, but I'm not sure. So because of that, just ask Admiral Market Support and they will be able to help you, I think. So that is concerning Sunday webinar. Concerning Euro Dollar market analysis, yes, it will be shown in a couple of minutes. So maybe it will be for public, maybe it won't. Just ask them. I'm not sure whether they will upload it for a public view or not, but the premium webinars are only reserved for Admiral Markets holders of accounts. So basically you need to be client of Admiral Markets to be able to see premium webinars and get those premium indicators. So today 5 different pairs, 5 setups. And before I begin, standard is disclaimer. Okay, good evening. For the first time I'm attending this webinar. Welcome, and hopefully this won't be the first and last time, because each Monday we have great session recaps with many pips. So of course last week results were also very good. Online educational materials are developed by Admiral Markets AS Estonia for a global audience. Therefore, please take into consideration that the information in this session may not be suitable for everyone. To get the corresponding information on charting conditions and any other detail, please visit www.admiralmarketsglobal.com, select your country of residence, and contact an appropriate entity. Risk disclosure statement stating all the possible risks associated with Forex market. By accepting those risks, you are also proceeding further with me. Admiral Markets UK Ltd takes no responsibility for the information accuracy. The analysis represents the personal opinion of the author, me, and in no way it represents the actual suggestion for the trade. These are not AMUK's opinions. The website in the video is not the .co.uk website, but the globally used .com website. Forex is risky business. This should be not taken as advice. It's a personal opinion only, and this webinar is for informational and educational purposes only. So, having said that, we had some slight updates of results. So Euro Dollar was 80 pips in profit after our setup from last Monday. GBP was either plus 30 if you used trailing stop, or if you didn't use trailing stop, minus 70. Aussie hit stop loss minus 30. Dollar Yen trade of the week 90 pips with very low drawdown, maybe 2, 3, 5 pips of drawdown, then 90 pips in profit. GBP Yen 25 pip sell position, because we are using sell scalps as a trailing stop. So basically those were the results, and total of 125 to 195 pips pool could have been gathered amongst those 5 different pairs. So if you use these setups, I always and I strongly suggest that you use trailing stop, because usually my trades go 20-30 pips in profit, then they might reverse, but because market is not perfect and we follow big money, once you're in the profit of 15, 20, 25 pips, put your stop loss to break even, or put your stop loss to break even plus 20 to secure those 20 pips. So market plan for Euro Dollar. But before I continue with today's webinar, I will show you a real chart of last week. So this was our trade, sell position around 37.30, stop loss 37.60, target price 36.50. What happened was basically this was the time of this was the time of our webinar. It was 19th of May, so it was something around there. And after that we saw that euro dollar dropped, but here in this point it hit our selling zone. My setups are very valid for today, tomorrow, and sometimes day after tomorrow, but as always pay attention to my daily analysis on Admiral Markets blog, Twitter, and Forex Factory, because I may update some of this analysis. Okay, some of these analysis may be and may get updated during next few days. Always pay attention to that. This was the time of, this was the selling zone, and after the price hit the selling spot, 90 pips could have been gathered. When I sell, position sell, it doesn't need to be just to the pip. 10 pips difference is acceptable always, because my stop losses are always small. Averagely I use 30 pips stop loss, and basically this trade was great because it gave us almost 2-1 risk reward in intraday basis. And when you're trading intraday basis, even 1-to-1 is good if you use trailing stop, and 1-to-2 is very good, because we are trading each day, we are trading intraday. I don't make these setups for weekly, monthly traders. As I say, these setups are valid for today, tomorrow, and day after tomorrow, and you need to pay attention for my regular updates on Twitter, Admiral Markets blog, and Forex Factory Spiders Den. So nice trades from euro dollar. Cable was a little bit messy. This was the cable basically of the last week, and what it was, this was the time of our webinar, somewhere around there, and after our webinar, price indeed came to our selling spot, to our selling zone, 68.35 to 50, and let's say that you have shorted it there, you could have got some 27-30 pips, but ultimately the trade didn't play out as I was planning to do. I really had better plans for this trade because I wanted it to go much lower. The trade started in our direction. It went 30 pips to the downside, but then it was rejected and it hit our stop loss. So mixed results. If you used trailing stop, you could have got 30 pips. If you didn't use trailing stop, then you were stopped out for some 70 pips. Also a small loss on Aussie, Australian dollar. This was the loss. You know, many traders will never tell you that some of those trades were losses. I always admit if there was a loss, and last 6-7 months I've been doing these session recaps, and I've been always showing you all results, and all results after the market met our entry zone. So if it was a loss, I will show you the loss. It's not problem for me at all. Position by 93.25, it was 30 pips stop loss, and I wanted it to go up. The trade really hit our spot for buying, but it was up only 10 pips. So 10 pips, I cannot count that as profit, because 10 pips for intraday setups is not much. So I will not count that as a profit. The trade didn't made at least 20-30 pips. Even me, who use trailing stop, I cannot use trailing stop after 10 pips. So what it was, I count this as a loss. Next trade, 90 pips from dollar yen, trade of the week, dollar yen pair. Excellent setup, excellent trade, excellent pips. Dollar yen was the trade of the week. So 19th of May. This was the time when we had our webinar, and basically this was the time of our webinar. Here, this candle. After our webinar, price made it to this buying zone. This was the buying zone. The trade went some 30 pips in a drawdown, but it didn't hit our stop loss because my stop loss was great, 100.65. So it never made to the stop loss. And after that, it shot it up almost 100 pips. I count that as 90 pips because at this spot it was heavily sold and probably hit some trailing stops, but I count that as 90 possible pips out of this trade. 90 possible pips. Okay? Great trade, dollar yen. And last trade of the last week, pound yen, 25 pips of the pound yen. Sell around this spot, 171.25 to 30. Stop loss 30 pips, target price 170. But it was, of course, if we use trailing stop, we could have got some 20 pips out of 25 pips pool. What does it mean, pips pool? If I made a setup, let's say I made this setup, and let's say that the target was met. So basically we could have got some 170 pips pool. Pips pool is the total number of pips which were in profit for a particular trade. That means pips pool. If I say plus 40 pips, plus 40 pips, it doesn't mean that I or you made 40 pips. It means that it was the maximum number of pips which could have got from my setups. So if you got 10, 15, 20, I don't know, 35 pips, it's still good because all of those pips are free pips thanks to Admiral Markets. They are supporting me and I'm supporting you, and because of that I'm willing and I'm really glad when I make those free setups for you. So that is why I encourage you to always sign up for those free webinars, session recaps, and follow updates, because I won't leave you without a clue. If something changes from these setups which I will give you, I will post that on my Admiral Markets blog, Forex Factory, SpiderZen, and Twitter. Okay? So, pound yen 25 pips, and that was the last trade of the pound yen because that trade was good for 25 pips, and then subsequently it reversed. So we had a shooting star here and 25 pips out of possible 25 pips. So if you use trailing stop, you could have got at least 10-15 pips out of these trades. Okay? And now let's move on to new setups. Euro dollar. What I see on euro dollar? Well, I see sell position around 36.75 to 90, 30 pips of a stop loss, and target is 36.20. Because we are still in a downtrend, but it's not so great of a downtrend. I still think that we should short it after a pullback, because if we do a trend trade, then basically we want a pullback, then sell. The pullback, what I would like to see is somewhere around this zone. We have a history of sellers here. You look at this. This was a support, and at this point it turned as resistance. So it was a breakout, then it was a slight pullback, then again breakout, pullback, continuation trade. So also sellers can be spotted here. Wicks indicates that there was buyers, but strong rejections out of these zones indicate sellers. Last 4 candles of the prior swing high were sellers. Look at this, 1, 2, 3, 4. This is selling spot for euro dollar. Even though if this doesn't make 50, 60 pips, I think that the first entry into this zone will be good for at least 15 to 20 pips. Because we have a history of sellers, as we can see by these rejections here. We have a doji, we have a doji again, then we have a, this is a bullish, this is a bearish candle. This could have been, easily this could have been a Marubozu, but it isn't. Again, a selling pin, 1, 2, 3, 4 pins at the last swing high. 50 Fibonacci retracement of the last swing low, and we have a history of sellers. So my analysis shows that we could short it around 36.75 to 90, only 30 pips stop loss. Alternatively, there is another buy, but I see only a resumption of a buying trend. That means resume of uptrend if it makes a breakout pullback continuation at 37.35. 37.35 is important level for euro dollar, because you see long leg doji here, you see 37.35 level, you see inverted head and shoulders which wasn't met. As you remember, this was a great trade which I made on Admiral Markets. If you remember this trade, 19th of May, I will try to find it here. That was a great trade, and that was another way how I treated inverted head and shoulders. I actually sold it. If you remember that trade, let me find it for you. This was the setup, which actually was totally different from 90% of Forex population, because when they see inverted head and shoulders, they want to buy. And actually what I did, I was going for a sell. This was, if you remember this setup, after my analysis, the price went here and it was sold. This was really, I like this setup because we were selling at the resistance. Great risk to reward ratio. So in this point, only if this point is broken, retested, and broken again, so breakout, pullback, continuation, we can hope that euro will resume its uptrend. If euro is below this level 37.35, that is bearish. That is totally bearish. So only if euro breaks 37.35 and retest, you know the pattern, breakout, pullback, continuation, only then we can say it can hit 38 again. So this is resistance, this is breakout, this is pullback, and now if you make an order there, it's called breakout retest. If you make your order here, it's called breakout pullback continuation. This spot here, number 2, is continuation zone. So breakout retest continuation or breakout pullback continuation. Okay? And that is where we can buy euro. Next setup is GBP dollar. We have M pattern on GBP. Now I'm a little maybe boring with this, but and for me now the pound is only sell. This is what I see, and this is what we really need. If pound wants to go above these two important zones, because this is huge selling, this is huge selling, and now buyers see that many good news was priced in GBP dollar price. So I think that it would be fine if they see that the pound just cannot go higher than this. It's time for a retrace. Now, I don't know if big players are listening to me and big banks traders are listening to me, but I want to say that it's a perfectly normal now if the pound retraces to 66.50 level. From a technical standpoint, pound should drop. From a technical standpoint, it should come up for a retest of the zone. Huge buying here. It asks for a retest. And then it can make a possible new leg up. That is what I see. That is what it should be. But, you know, I don't move the market. I follow the market, but I don't move it. So what I would like to know is, position sell is this, 68.50 to 68.60. 40 pip stop loss, target 67.50. If it makes it and breaks it, then we can go for 66.50. Also, pay attention. If it makes to 67.50, it can be a buy scalp, 15 pip trailing stop, because there is history of buying at the region, and I presume that this region is protected. But still, if we sell it from some 68.50, 60, we have chance to go lower. And this looks really like a downtrend. Does it look like a downtrend? It really looks like a downtrend. Although daily is uptrend. But you see, this was the last high, then this was the low. And this was the last a lower high. So it should make a lower low, guys. It should make a lower low. Okay? Because this is not swing high, this is lower high. This is swing high, but not higher high. This is lower high. So a new lower low should be printed out. Okay? So that is what I see on pound. And as I say, if you want to buy it, the only way I see a possible good buy setup, I think maybe 80% sure setup, at least for a scalp trade, is around 67.50 zone. As you can see, those wicks represent buyers. They represent buyers at the region. Okay? Aussie, it's support of daily and pattern. If you remember my analysis from some couple of days ago, I think, I will show you that we were basically sitting also at the support. I don't know, I think it was published. Let me see. That is basically the same setup. I will be looking. No, it seems, yeah, I was trading it, but I think I didn't make an update. Okay. What I want to see is this. This is consolidation. This is a clear consolidation on Aussie. But if you open 4-hour time frame, you can see that this region here is protected. If we pay attention to these trend lines there, we can see that the price is in consolidation triangle. What I would like to see is a rejection, a nice rejection again, of 92.20 to 92.10 with only a small stop loss of 91.90. But I want to see the price hit 93 and 93.25. That would be perfect if it happens. The sell trade will surely come. I can say I'm 90% sure. At 90.90 on breakout pullback continuation, targeting 91.50, 91.20. So if this level breaks, it will collect some stops down there, and it will make a breakout pullback and possible continuation down. So buy setup and sell setup for Aussie, whichever hits first. Dollar yen, it's an uptrend. We still have a bullish wedge, and we still can buy the dollar yen. For me, buying zones are this 101.60 to 50 with target 102.05. Why this zone? Because we have a history of buyers here, history of buying, just look at those rejections. It's also 38.2 swing, so I would like to see it somewhere around there to buy it again. So dollar yen for me is buy with a stop loss of 101.20. It's where we have a trend line. Now we have a trend line like this. See rejections. You see this zone, so below this zone is stop loss. And for me, stop loss is 101.20. And I would like to see a pullback towards 101.60 to 50 zone. Okay? And hello, Daniel. He just joined up. Hello. And finally, GBP Swissy. I see a nice sell on GBP Swissy. Look at this. This is consolidation. Range. Up, down, up, down, up, down. Now, where is the range? This is the range. And this is trend line which points out to the breakout of this range. So around this zone, I will be looking to sell. Making stop relatively small. 50.80, 51.15 stop loss, 50 is the target. So, if it happens, I think we might see a nice drop. Towards this zone. History of buying here. It will make a pullback, but it needs to come at this level or slightly above in order for me to sell it. 51.15 is a stop loss. And I'm paying attention to this trend line. This is inner trend line now. It was broken, retested. This is breakout. This is retest. At this point, there is a continuation. So, breakout, pullback, continuation. So this is interesting for me. Dollar CAD, I didn't make any analysis, but for dollar CAD, maybe I will make an analysis tomorrow. It's hard to me to analyze dollar CAD now because market is on total vacation today. Bank holiday, Memorial Day is in USA, and as such, the banks are all also on holiday. But dollar CAD is really dollar and CAD dependent. And you know, when there is a holiday in USA, it strongly reflects also in Canada. So basically, dollar CAD maybe tomorrow, but I need to see the movement of dollar CAD first, and I want to see how dollar performs versus other currencies, okay? Then I will make dollar CAD analysis. So I will go through these slides again so you can memorize it, point it out, and if you have any further questions, now is the time, of course, to ask me. So this is a slide for euro dollar. This is slide for dollar for cable. This is for Aussie. This is dollar yen. And this is GBP CBC. The question, maybe it is too much, but what do you think about GBP Aussie? Predrag asked GBP Aussie. Let me see what I think about GBP Aussie. Strong uptrend, of course. I would like to see a retracement. So if GBP dollar wants to move down and it moves down, also GBP Aussie should move down. Let me just give me a few moments. Then I will make euro yen. This is not a wedge. It isn't a valid flag. I would like it to see somewhere around this zone, and I will be looking. If I was you, I would sell it, of course, at this zone, because we still need to retrace for such a big movement. 93.6 is very shallow retracement, at least 38.2, because it makes a confluence with trend line and lower lows which were printed out. Okay, so basically first target for selling would be 81.80, this zone, and the sell could happen again somewhere around there, and we have another trend line. So pay attention to this zone and this zone. Now this looks like very close towards 81.80, and for me GBP pair should go down. I don't know why they don't go, but they should have gone until the last week also. I was really thinking it will make 66 zone, because 66.60 is really, this asks for a nice drop. It's too high at the moment. I agree that pound is strong, and I agree that it's a nice uptrend and such, it's okay, but it asks for a drop. Even on daily chart, clear technical analysis, low, high, higher low, higher high, higher low, higher high, higher low, higher high, then a lower low, lower high. It should have started, and that is why I'm looking to sell the pound. Technical analysis says it has started. High, low, lower high. According to proper technical analysis, it should make a lower low. Maybe I will be wrong, I don't know, but technically it looks like it. And euro yen, let me show you what I think about euro yen. This is quick analysis, so I'm not in a full mood now, but let me do a quick. You told me, Daniel, that you see nice head and shoulders, right? Yeah, but which time frame? Which time frame? Head and shoulders. This looks like inverted head and shoulders. Ah, you think about inverted head and shoulders. because this looks like inverted head and shoulders. Left, head, right. Yeah. Now it's a neckline. So selling zone is exactly this. This region from here to here is selling spot. Only if it breaks this spot, look out for breakout, pullback, continuation. Else, this can be treated as a sell with a really small stop pointing just above this level. Or if you are too conservative, you can make it, well, it's only not 20 pips. It's nothing. Yeah, it looks like a strong resistance, and it should be a resistance, because we have 1, 2, 3, 4, 5, 6 rejections. So if you want to sell it, for me, it's a technically valid sell. Buy would be only if it breaks through this neckline. So only if it breaks through breakout, pullback, continuation. Then it can be a buy towards this level, But now it's high, and now well, you know, euro, dollar, euro, yen, if they move in correlation to each other, there might be also, it might happen that it reaches this zone and closes below the level. So again, this is a good selling spot for euro yen. So if you want to sell it, good risk to reward, go for it. This is daily buy here. See? So for continuation of downtrend, this trend line needs to be broken, and that will happen only if the low of this candle is broken. 138.14. This looks like consolidation triangle here. So soon it will break out on either of those sides. But of course, I would never buy it now because it's too close to resistance. The only valid technically normal trade would be sell, or buy only if it breaks, retest, and then continues. So that was it. If you have any further question, guys, you can ask me. If not, then be sure to sign up, of course, for some new education. Live Trading Lab with Chris. Money management compounding, interesting way for investment trading is compounding. So sign up for that, and many good other free webinars. Slides again, no problem. Setups again. Euro dollar cable. Aussie. Dollar yen. And Swissy. But pound Swissy. For euro yen slide, I'm not sure, but guys, if you want to see a trade on euro yen, this is not my personal favorite, but you can go with this. Okay. Let me make a slide for euro yen. Head and shoulders. This is it. Small stop loss really for this trade. Inverted head and shoulders is specific pattern because it needs to go through some of those targets. So I cannot make a specific target price. Use trailing stop if you sell, and 138.75 should be a first target. 38.75, but use trailing stop. And alternative position is breakout, pullback, continuation, buy trade at only if it breaks this level, but let me check it again. Yeah, it is 139. Say 15 with 30 pip stop loss towards it's 45 as I thought. Not very good risk to reward because euro dollar is still in downtrend and euro yen is following it. If you see daily is still downtrend. So basically this is what you can do on euro yen. Okay. Another question. Can you show other charts again? Oh, let me see. What charts? Would you like to see these charts here? Euro dollar. But I explained charts. Now I can show you slides. Okay, Claudio needs to go. Thank you. No problem. Cable, Aussie, dollar yen, GBP Swissy, and euro yen. This is cable. This is Aussie. This is dollar yen, Swissy, and euro yen. Yeah, if anything is not clear, you can always ask me. My email, tarantulafx@gmail.com. Follow me on Admiral Markets blog, Twitter, and of course, Spider's Den. And follow these updates. If something changes tomorrow, I will be updating it and you will be first to know, of course. So thank you again for listening to me. Thank you again for asking those questions. I'm here for you, and I will talk to you very, very soon, guys. Cheers, and I wish you green pips during next 4 days. Talk to you soon. Bye.